Hey guys, it's Dave Barnett once again from davidcbarnett.com. This week I wanted to do a video about a very interesting call that I did just the other day on clarity.fm. I was speaking with a business owner from the UK that was talking about, he wanted to ask me about what sort of metrics he felt, that I felt he needed to track on a regular basis in order to keep an eye on his business. And the problem that he had is that he thought things were going well, and then it became apparent that one of his suppliers had misinvoiced him, and he ended up owing a bunch of money that he didn't know that he owed. And it turned out that the golden period that he thought he had just gone through wasn't in fact so golden, and he had actually dug a little bit of a hole for himself. And our conversation focused around gross margin and understanding if your daily operating activities are actually performing to the point where they need to be. Before I get into the details, though, I want to thank all of you who took the time a couple weeks ago during launch week to buy a copy of my new book, How to Sell My Own Business. I did succeed in getting it up to the #1 spot under entrepreneurship for Amazon. So thank you very much. And for those of you that didn't get a chance to buy it during launch week, it's available from Amazon right now at any Amazon store around the world, as well as from my blog site, davidcbarnett.com, as a PDF download. So let's talk about gross margin. And I dug out an income statement here, and I've made it anonymous, but this is for a construction-related company, and this is an actual financial statement from someone. And we'll see up here that we have net sales. So this is the amount of sales that the company had. And there's another line here called cost of sales, and you'll see that it's blank. And that is a huge red flag for me. Down here, we'll ignore the fact that there's income taxes and amortization. Down here we have interest expenses, advertising, the fuel in the vehicles, leasing expenses, freight, bank charges, professional fees. Salaries are down here, subcontracts, tools, utilities. So all the expenses of the business are listed down here in the expenses, and you'll see here that there's an operating income. So this company is making profit. And for a lot of business owners, if they're not familiar with financial accounting, they'll get a financial statement like this and they'll say, hey, I'm making money, everything is okay. But here's the problem with this. When I get asked to analyze a business like this, one of the very first things that I want to do is I want to do what's called benchmarking. I want to compare this business to other similar businesses in the same industry. And I've got different places that I can go and look for that information. But one of the most important pieces of information is what is the gross margin. So what do I mean by gross margin? Basically, if you look at the direct expenses related to serving the customer, after we serve the customer, how much of that invoice that we send out is then available to help cover the overhead of the business. In an example like a restaurant, I can tell you that, for example, food cost in a restaurant is typically around 30%. And different types of restaurants are going to have a varied food cost. A pasta Italian place might go down to 27 or 28. A full-service fancy restaurant with really exotic offerings might be up into the 40s. But if I see a pizzeria with a 45% food cost, I know immediately one of two things is happening. Either their prices are too low, there's too much waste going on, or employees are stealing cash out of the till. There's sales being made that aren't being reported, or the owner is, for example. So it immediately raises a red flag that there's something going on. There's not enough money being made off of every pizza or plate of pasta that's being delivered to the customer. In this example here, we have no idea what the gross margin is. So this business owner, if he were going to look at monthly statements, he doesn't know if he's charging his customers enough. He doesn't know if too much labor is going into each job. He doesn't know if too many materials are going into each job. This is a construction-related business. You could try to track those things on a project basis, but for an everyday business that might be out there, where you've got goods coming and going and you're serving people every day, you need to have a proper breakdown of your cost of goods sold. So I created an example here of a better type of income statement, which I often see with construction-related companies. And you're going to see immediately why this delivers more valuable information. So over here, I've got sales, and I didn't try to break out these numbers because I really have no idea what would go where. And then we have a cost of goods sold. So instead of simply reporting the salaries that we pay out, we want to know how much money was spent on the guys actually doing the work, the direct labor. We want to know how much money was spent on materials for the jobs. So not the materials for repainting the back door of the shop, but the materials that went into the jobs that we're working on. We want to know what the work vehicle fuel and work vehicle expenses are. We want to know how much money did we spend getting our guys out to the job site. Freight, equipment, subcontracts, you get the point. I want to know how much money was spent at the customer site delivering the service to the customer. That way, I can get a total cost of goods sold and determine a gross profit. So, for example, let's say this business had a target that they wanted to have a gross profit of 50%. So if they bill a client $100, they want to make sure they're not spending more than $50 to deliver that service, so that the other $50 is available to go and cover overhead expenses. The business, if they have a properly set up cost of goods sold section on their income statement, is able to do a review of their performance very frequently. So every week or every month, you can stop and look at how are we performing by using the financial statements. Okay, I can bet you dollars to donuts that this income statement comes from a business where there is an owner who manages by running around. He's basically trying to watch everything happening. He's got a bunch of information in his head, and as long as there's a profit at the end of the day, he thinks that he's doing well. Well, here's the problem that can happen, is you can start to have creeping increases in your prices, and if you still quote jobs the same way, what'll happen is your gross margin will start to shrink. And if you're only looking at your financial statement after the accountant has prepared it at year end, which typically takes 3, sometimes 4 months after your year end actually happens, you could be looking at trying to address a problem, a year and a half after the problem actually started to occur in the business. And what can happen in a year and a half in a business? Quite a lot. You can get into cash flow issues, you can get into all kinds of problems, and without knowing what your gross margins are, you can start to misidentify your problems. So you could say, I have a receivables problem because you don't have enough money to pay your bills, when in reality, you have a gross margin problem, meaning either you're spending too much to deliver the service or you're not charging enough to your client. Down here on the bottom, we have our overheads. So these are the expenses that the business has to pay regardless of how many contracts are done. So we've got our interest, our vehicle overhead expenses for the overhead vehicles, so the boss that drives around, the salesman who goes around quoting jobs, the fuel on those vehicles, finance charges, bank charges, office expenses, professional fees, property taxes. I like to see repair and maintenance broken out between different classes of capital goods. So repair and maintenance on vehicles versus maybe the building. Administrative salaries, the owner's salary. These things are not directly related to jobs that are being done. They're part of the overhead. If we know that we're defending our margin, if we know that we're getting the proper gross margin all the time throughout the year, then an income statement like this can help us see where our problems are. So if our gross margin is being maintained, if we're always making the same amount of profit on every job that we do for our customers, but our net income is declining, then it's pretty easy to see that the problem is in the overheads. So some of the overhead expenses are creeping up. As long as you're getting your gross margin and you're profitable, you can then take your time addressing overhead expenses one line at a time, looking for waste, looking for new suppliers, better opportunities, better staff in the administrative side of things, better deals on your internet connection or whatnot. But without having your overheads and your cost of goods sold broken out, you're not able to use your financial statements on a day-to-day basis or at least a month-by-month basis to make sure that your business is functioning properly. Anyway, I hope that helps and gives you a little bit of insight into some of the things that I see when I'm helping people look at businesses to buy or sell. And if you're running a business and you intend to sell it one day, it certainly makes sense to have a properly structured income statement so that a buyer can make more sense of what it is you're trying to sell them, and to make sure that you're managing your business properly day to day so that you can maximize profit and at the end of the day, maximize the selling price of your business. And at the very least, make sure you stay open because you actually know what's going on in your business. If you want to learn more about buying and selling small businesses, managing the day-to-day of your business, make sure you go over to my blog, investlocalbook.com. There's a place to sign up for my email list. I send out an email every Friday with a video and new information to help you learn how to do these things better. And don't forget, it's April 2016, and I've got 7 upcoming events, live events, both online and in person, Moncton, New Brunswick, St. John, New Brunswick, Boston, Massachusetts, and Halifax, Nova Scotia, as well as a couple of online dates. And you can find that again at my blog site. There's a direct link to this Eventbrite page where you can sign up and get your tickets. Thanks, and we'll talk to you soon.